I haven't held much Bitcoin for a while because, I look at this in terms of network effects, and my view is that more things are being built on Ethereum. It's a richer, deeper network, more use cases, and over time, I think the value of the Ethereum network will be more valuable than the Bitcoin network, unless something changes. Now, ordinals and stuff like that, maybe, let's see. And so it's just from that thesis alone that I haven't held much Bitcoin. I've just thought it'll underperform. Now, it always outperforms in crypto spring.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about Bitcoin and Ethereum ETF approval. According to Raoul Pal, unless something changes now, Raoul Pal believed that the value of the Ethereum network will surpass that of the Bitcoin network around. Let's see. And so, Raoul Pal haven't retained any Bitcoin, since Raoul Pal basically assumed it will underperform based on that concept alone. The least risky investment in that market consistently outperforms initially. Then what happens as spring gives way to summer? You begin to see alternative performers outperform, especially the bigger alts initially, followed by the lesser alts thereafter. Believing that the story surrounding ETH will be false and take people by surprise, people have essentially sold ETH to purchase because of the ETF. Bitcoin is all right, and this stage of the cycle makes sense. So what occurs is that the ETF is declared after the announcement of the Bitcoin ETF. What will everyone do? Everyone planned to purchase ETH since the SEC is unable to reject an ETH ETF due to the approval of an ETH futures ETF. To do otherwise would be arbitrary, to use the fancy word the court employed, and lots of things Raoul Pal discuss, so please watch the video to end, and share, subscribe our channel, Everyday Finance. Thanks.
The other flip side of that, as I said, you're better at it than me, is I end up with the shrapnel of shame sitting in my wallet of
That's
all
fine.
of the things that I bought. And it is fine. It's like a VC. You don't know what's gonna fly, what's not. I just never had any of those fly. So I've just got a bunch of shame sitting in various wallets. And so I actually prefer to hyper concentrate. I'm like, I know the bet I want to take. I think it's a really high quality risk reward. I'm just going to take that bet. Really, it's really Solana and ETH.
Solana and ETH.
Yeah, nothing else adds up to much. It's just Solana and ETH. And of which Solana is the larger bet.
And interested to know why you didn't say Bitcoin.
I haven't held much Bitcoin for a while because, I look at this in terms of network effects, and my view is that more things are being built on Ethereum. It's a richer, deeper network, more use cases, and over time, I think the value of the Ethereum network will be more valuable than the Bitcoin network, unless something changes. Now, ordinals and stuff like that, maybe, let's see. And so it's just from that thesis alone that I haven't held much Bitcoin. I've just thought it'll underperform. Now, it always outperforms in crypto spring. The least risk asset in that space always outperforms at first. Then what happens as spring turns into summer, you start getting outperformance of alts, and particularly the large alts first, and then the smaller alts later. So there's nothing unusual about what's going on. Also, very interesting to see the chart of ETH Bitcoin, kind of long-term weekly chart. It's been a very interesting, that to me is an incredibly interesting chart, because I actually draw the wedge coming up from 2017 low through the 2020 lows.
Hold on, I think this is your chart, right? Is this?
No,
is
not
this...
that one. This is the bigger one than that. So go back to your chart.
Okay, there it is.
Okay, just draw a trend line from the 2017 low.
2017 low. So you want it from there?
Yeah.
Okay, let's draw that trend line over there.
This is what I'm really interested in.
Holy shit.
If this is right, this is a massive wedge pattern. Now, I put it on a log chart, on a log scale.
Okay, let me quickly put it onto the log.
No, it is on log. It is on log.
It is on log. So this is a big level for ETH.
Yeah, and we're putting in the stuff that I look at. DeMark indicators, everything else, they're suggesting the low comes this week, next week, the week after. So I'm thinking that the narrative around ETH is going to be wrong. It's going to catch people offside. People have basically, because there's been no new money in the space, so they've sold their ETH to buy Bitcoin.
Okay.
Because of the ETF, right? And this point in the cycle. Makes sense, fine. Then what happens is the ETF is announced. What is everybody going to do after the Bitcoin ETF is announced?
Buy ETH. They're going to buy ETH because the SEC can't actually decline an ETH ETF because they've approved an ETH futures ETF, and if they did, that would be capricious. And what's the other word, the fancy word that the judge used? It would be capricious if they did that, right?
Exactly. So every trader is going to switch their bet from Bitcoin to ETH, and that changes the dynamic. Now, ETH has been kind of, as I said, struggling around a bit, but once it clears 1900, it gets really interesting. I think I put out a chart yesterday on the ETH chart on my Twitter feed.
Raoul Pal believe about the markets were beginning to move. Larry mentioned that to determine that this excess supply issuing of was the actual source of the issue bonds, and that the rate of inflation was not rising, but the rates on bonds rising. And that's when gold and cryptocurrency started to rise extremely swiftly. Evidently, the correlation began to increase. The more bond yields increased changed, and Raoul Pal believed that the market's awareness of that change drove that association. If bond yields continue to rise in this manner, the government, the Fed, or someone else will step in to ensure that you get when someone gets closer to the cowbell. The stimulus will cause them to act. So it was a major contributing factor, in my opinion. And once things got moving, people began to wonder if the bond market would become out of hand. You'll need to find a place to hide, and you already know that the banks have started moving down once more, and if you recall, at the same time, Raoul Pal believed they started to falter a little. Let me see when it happened. The date was, it's probably roughly the same. Yes. On October 16th, the banks reached a small peak before falling sharply, and as a result, once more, the role of the market is to predict the likelihood of stimulation or a flight to safety. And Raoul Pal believed that is how Bitcoin always performs well out of it.
I think it was around the time Larry was saying what he said, the markets were starting to figure out that the real problem was this excess supply issuance of bonds, and that inflation wasn't going up, but bond yields kept rising. And it was that moment that gold and crypto picked up very quickly, is that the more bond yields go up, the more they started going up. That correlation changed. And that correlation was driven by the fact, I think, that the market knew if bond yields are going to go up like this, the Fed or the government or somebody's going to intervene. So you get closer to the cowbell, the stimulus, somebody's going to do something. So I think that was a really big factor in it, and things started taking off. It's like, okay, if this bond market's going to get out of control, then you need to hide somewhere. And also, the banks had started going down again as well, if you remember.
Yes.
Same period. I think they started breaking down a bit. Let me see when that date was. I'm sure it's about the same. October 16th, like the banks had this little peak and then started dropping like a stone. And so, again, the market's job is to forecast the probability of stimulus or a flight to safety. And Bitcoin always does well out of it. So that's what I think started it off. And I think Larry saying the same thing around the same time that the banks turned around, also adds fuel to the fire. I don't know if there's any economic data out that day, but there was probably something around that as well.
So do you think the bond markets are broken? Do you think, what's going on? From a macro point of view, what's going on?
What's going on is interest rates are too damn high, and they have to issue ongoing bonds to cover the deficits, but they have to roll the bonds from last 4 years, from 4 years ago in the pandemic cycle, from 1% interest rate to 5% interest rates, or 5.5%. And the problem is, to do that, you have to issue yet more bonds to pay for that. So we're just getting awash with issuance. And this has been my argument about the everything code, is that there is no way governments can issue bonds at 5% interest when you're 100% of GDP in debt, because there's not enough economic growth to cover it. So the central bank has to buy it. And what's happening is, here we are pushing the central bank to buy it. Now, whether Janet's doing that on purpose is like, Jay, you're going to have to take this. But I think there's a game being played, is like, okay, we'll show the stress, we'll create the stress, we need to cut rates, we can roll this debt at lower levels. And if we can find the right excuse, like a recession, we can push it onto the Fed balance sheet.